Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Petersen.
All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, whatever day it is for you and wherever you are. As always, it is Friday here on the podcast and it is nice and sunny. I've said this for the past couple of episodes, but I am so excited that spring is here. It's supposed to be in the high 70s today in Seattle, which to us is like 200 degrees. So it's a good day. I'm really excited for this. It's a good day for a second reason though, because we have Ali Choucri with us on the podcast, and I think I mispronounced that last name, Ali, but we're going to roll with it. Ali does condo conversions and also senior housing, which is something that we don't touch a lot on the podcast, but it should be pretty interesting. So I'm excited to jump into this. Ali, thanks for hopping on the show.
Thank you, Gabe. It's a pleasure to be on the show.
Yeah, and your last name is pronounced Choucri, right?
Choucri, that's right.
There we go. All right, Ali, I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Well, I have two beginnings. The first one was out of college. I got a job as an analyst in finance and doing REIT valuations, helping out with REIT M&A. And so I was in real estate technically, but very far removed because it was more finance than involvement with the actual asset. But in 2000,
you were in REIT M&A, so you did mergers and acquisitions for REIT companies, like a REIT would buy out another REIT.
I work for an investment bank, and the REITs were the clients, and they would be buying or selling, and
Interesting. Okay.
I was an analyst at the time, though, so I was just in Excel and PowerPoint cranking out presentations about all that stuff.
Yeah, well, it's still, I mean, that's one of the highest, most meta levels that you can get in real estate is a REIT buying another REIT. So I'm sure that's an interesting perspective.
Totally. And I hope, maybe we'll touch on that I think maybe that could come full circle at some point. But, but I moved to Boston in 2013, was in grad school, and was working with a short-term rental company that just Airbnbs apartments, rents apartments and Airbnbs them. Back then you could do that in Boston and make, good monthly cash flow.
Yeah,
And through that,
like 5 years for Airbnbs that people were just raking in the dough. Just
it was amazing. Yeah, it was very easy. Rent, furnish, start making money. It was amazing. But I ran into a friend who was a broker who was renting an apartment at the time, and he just said, "Hey, I think you'd make a good real estate agent. Why don't you get your license on the side?" And so I did. Got my license on the side and did a couple of rentals, and I was like, I don't think I want to do this. I don't think I really want to sell homes. But I did a rental for a big like institutional landlord, essentially, like a big company in Boston. And I asked them, like, are you still buying buildings? And they gave me the criteria of what they're buying. And so I started looking for off-market multifamily. And that's how I started my career as a broker, sort of like as a deal hunter, looking for commercial deals off-market.
So
and that
cold calling, letters, all that kind of stuff.
Yeah, at the time, my strategy was actually just using other brokers. It was networking, and I found that everybody knows a broker, and a lot of these building sellers would go to a broker, and they'd be a residential broker, not a commercial broker, and they'd say, "Do you have anybody for my $10 million building?" And the agent doesn't want to lose it, and he'd say, "Let me think about it."
Of course.
So if I meet that agent and I say, I have the buyer you're looking for, then we would work out a situation.
Nice. That's interesting, though, that you would think if somebody owns an asset that's over even like 2 million, they would go to somebody that specializes in that asset, not go to a residential real estate agent. If you have a multifamily, a 5, 10 unit, 20 unit multifamily complex, you'd think you'd go to somebody that specializes in multifamily, but that's still a lower level of multifamily. And so it makes sense that these people, they're just mom and pop owners and they're just like, you know what, I know this guy, I'm going to go to him. So if you connect with that person, the broker that they're going to, you have an opportunity to make a good deal.
Yep, exactly. Yeah. And I think over the years, like here in Boston, people have gravitated more towards commercial brokers. But back then, I used to hear a lot of things like, I want to sell privately. I don't want everybody on the street to know that I'm selling my building. Like there was a lot of neighborhood history that also affected it.
Yeah, that makes sense. So you started as you started as an analyst, then you got into being a broker. At that point, where'd you go from there?
In brokerage, that sort of business dried up a little bit off market deal sourcing. And so I ended up opening a residential office,
Hmm.
doing a little bit of commercial leasing. So I was very broad. But my goal was to get into the investing side. And that's where condo conversions came in. I started selling something to certain types of properties to a developer. And I just saw the pro formas and the deal and how long it takes to do. And I said, I want to be on the other side of that. And so I started doing that, first investing and then being a partner on these projects where we'll buy a 2-unit multifamily, gut renovate, and then sell 2 luxury condos on the back end. We sell each condo between 1.1 and 1.5, I would say. 20% margin on our deals. We're doing hard money.
Really,
Pretty,
1.1 and 1.5 in Boston? Well, I guess I don't know the Boston market at all. So, but
yeah,
that
very
I thought
high.
Boston was, or maybe I'm thinking of Baltimore. I'm probably thinking of Baltimore. That the prices are a little bit more compressed. But Boston, obviously, you got MIT out there. You got, I think Harvard, right? So I'm sure the prices are pretty high up there.
Yeah, no, Baltimore is lower. Boston has high real estate price. Like we compete with New York in some areas.
Yeah. Okay. So yeah, that's interesting. So you took basically small multifamily, and we're talking residential multifamily, 1 to 4 or 2 to 4 units, and then you turned them into condos. You sold them as like a townhouse kind of individual sale. That is a very unique strategy and something that makes a lot of sense, especially in markets that are on the coast, coastal markets, really high purchase price. What do you have to do for that type of conversion, especially on, I'm assuming, the permitting side and getting approval with the county and the city and all that kind of stuff? What are the steps you had to take to get that done?
Well, the first thing is when we buy, we want to get an affidavit from the owner saying that usually it works best with old owner occupied properties where they lived in one unit, rented the other. And we need a piece of paper saying basically everybody left of their own volition, that we're not gentrifying, buying and
Mm.
kick renters out. So that's the first piece of paper. We try to buy right, and we try to go to people who, the place isn't good enough for somebody to buy and start renting it out. So it's a developer play. And if it is a developer play, then they don't want to be dragged through it like due diligence and stuff. So we'll give them clean offers um, quickly as long as we get the affidavit. We're looking for 2 units with parking for each unit. And what we do is we dig the basement and we dormer the attic. And so we can add about 1,000 square feet below and above. And so 2,500 square feet of living space becomes 4,000, 4,500. And then each unit, call it 2,000 square feet plus, is a 4-bedroom, 4-bath duplex unit, granite countertops, central air conditioning, patios and marble fireplaces and stuff. And so it's very millennial friendly, very urban, inner urban, um, person friendly, uh, yeah, with parking and a little backyard in Boston, and people for the bottom floor, closer to the 1.1 to 1.3, and then for the top floor, a little bit more. Yeah.
Wow, that's really cool. So you guys, you also add living space to these. You dig out the basement. The dormer is interesting because not a lot of houses have the option to do this. You have to have a pretty big attic, essentially.
Right.
What do you guys look for when you're obviously you're not looking for flat roofs, which not a lot of them existed back in the day, so that makes sense. But
Right.
what do you look for in the conversion
You
in
know,
terms
we
of the purchase? Like when you guys are actually going out there, you're underwriting properties. What are you guys looking for?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Well, I mean, when it comes to the attic, it's well, we usually have the same similar floor plan for a lot of the units that we create, give or take. Offices and bathrooms and closets move a little bit, but for the most part, same type of floor plan. And the attic usually turns into a master bedroom with a master bath, with a walk-in closet, with a nice view. And then outside of that is a small seating area right when you go up the stairs. So knowing that we're standing in the property before it's flipped, and we're visualizing, like, is this a nice luxury master bedroom?
That makes sense. Cool. So that's what you personally are doing. You also are working in senior housing. Tell us a little bit about that. How's that been going? I've had a couple people on the show talking about senior housing, how there's such a big opportunity in this niche because of, they call it the silver tsunami, people getting into the age where they need that senior housing. So tell us a little bit about that, why you're excited about it, and what you guys are doing.
Absolutely. I have a friend here in Boston that, I've known for a couple of years, and he's the principal of a PE firm that, his background is multifamily syndications. They've owned lots and lots of apartment buildings, and like with a lot of people, returns sort of got difficult to pencil out. It got competitive. So 2.5 years ago, they pivoted into senior housing. And then in tandem on my own, I was having a similar experience. I wanted to invest in long-term commercial, larger multifamilies, the syndications. And so long story short, I ended up joining with this PE firm, and the strategy and the opportunity just ticks every single box from a business perspective. One is that, the baby boomers are aging into the 65 to 80 category, silver tsunami. The demographics support the need for a lot of senior housing. They're not building a lot of new facilities. It's very expensive with the cost of construction. So value add is a great thing to do. There are some good deals out there, some underperforming assets from the days of COVID that have struggled to recoup occupancy. So we can get in at very attractive valuations, low basis. And then the most important thing is that the PE firm Cougar Capital is aligned with a best-in-class senior housing operator. And they're the ones who go in and do, manage the day-to-day with assisted living, independent living, and memory care. And their skill set is just providing a very high level of care, but also increasing occupancy and lowering expenses and managing the place better. And we find that as a small, nimble operator, we can, find money that the larger REITs have sort of overlooked. And so that's the strategy in the nutshell. And I'll just say, people used to get into multifamily syndications looking to conservatively underwrite 10% cash on cash on average. Like every year you make 10% cash flow on your money. That number has dwindled down to 6 and 5, and the first few years it's 1 and 2%. Senior housing is much healthier. There's a lot more going on in terms of the business, so there's more business risk. But we're looking at a deal right now where the cash flow day one is north of 12%. So very different return profiles, and something that for people who want to build passive cash flow for a lifetime, and also provide a needed service, it just sort of makes sense. So that's what I mean by it ticks all the boxes.
Nice. Yeah, no, it makes a lot of sense to me. Are you guys developing, or are you converting existing multifamily?
We're buying existing senior living facilities, assisted living.
Okay. So ones that have
Independent.
already been retrofitted, they already have the, the handrails for people that are walking down the hallways, or I don't know what
Everything.
you do for,
Yeah. Yeah.
Okay.
Institutional quality, like usually from REITs.
Yeah.
100 unit plus usually is the acquisition criteria. And they're newer vintage, 2007 built or renovated. And they might have, in most cases, they're distressed.
Hmm.
And so we're getting it at a good basis, and then we're going to stabilize and turn it around in a short amount of time.
What are the value add strategies that people use in senior housing? Like what is it? In multifamily, you can maybe they don't have Wi-Fi, whatever it is. There's small things that you can do. In senior housing, I'm sure there's a lot more options. What are the options for adding value in senior housing?
Well, there's a lot of levers to pull from like a developer perspective, updating common areas, updating rooms. But I would actually say that all the value add is really on the care side,
Hmm.
because people are putting their loved ones in these facilities to be cared for. And so from A to Z, from the moment they walk in to when their loved one is living there, they want the process to be as good as possible. And what you find in this industry is that people who enter senior living have a passion for the elderly. And so I would say it's the staff, it's the motivation, it's the culture that invites new people in and raises the occupancy and keeps retention and gets the word out. And I think that, raising occupancy through word of mouth and good reviews is probably the highest value add. But you can definitely update things and raise prices and all that
Yeah.
kind of stuff too.
So when you guys, I mean, for instance, if you guys look at a P&L, you're looking at this property you're going to buy. What are things that stand out that you're like, okay, they don't have this, they absolutely need to put this in there. They're spending too much on this. Like, what are some common things that you see in the underwriting that need to be addressed on the close?
Yeah, I mean, that's really a question for the operator, but I asked our senior housing operator on average, what percent, of expenses would you say you can cut when you're buying from one of these sort of REITs that had a more bloated expense structure? He said around 8%,
Oh,
and
that's not very
and
much. That's surprising.
well, 8% on the annual rent roll I think is a big number. It moves the
Yeah,
needle.
has an impact. Yeah.
Yeah, quite a bit. If there's capex, that's sort of a separate part. But for the most part, it's good sales and marketing, making sure that the staff are working effectively together. Um, we actually drop rates in some cases when we first buy a place to raise occupancy and sort of have things level out. So it's a little bit different than multifamily with the value add aspect.
Yeah, that makes sense. All right, man. Well, I just took a peek at the clock. It looks like we have run it down, so it's time to jump into our quick question round. Are you ready?
Yep.
Let's do it. Starts with education, could be any form, could be a conference you've gone to, mentorship program you've been a part of, book you've read, movie you've seen, anything. I just need 2 recommendations, one for general life wisdom and then one for real estate.
Um, I'm in Rod Cleef's Warrior program, and
Oh, yeah.
so I would say, Lifetime Cash Flow Through Real Estate Investing is a very enlightening book. Um, it takes a lot of the principles that are known, Rich Dad, Poor Dad, and just sort of extrapolates it, what it would look like in multifamily. Believe in his program. I like that book. And then another one, I would just say anything by Sadhguru. He's an Indian mystic. He talks a lot about meditation and yoga and the nature of the mind. And, in a lot of this stuff, mindset is important. And I gravitate towards the Eastern stuff. So I would say anything by Sadhguru.
Nice. Yeah, I like all the Eastern books too. I've actually had Rod on the podcast. He's an interesting guy.
Oh,
Um,
nice.
All right, next question is for your younger self. So let's go back to the Ali who was just getting out of college and going. I think you were an analyst at a REIT. Go back to him, look him in the eye, give him one piece of advice moving forward.
Be yourself. I mean, more than anything. Don't compare yourself. Don't try to get approval from anyone. Doesn't matter who they are. Just be yourself. Took me a long time to learn that very painful lesson.
Yeah, yeah, and that's especially for your younger version of yourself. That's a very difficult lesson to learn because when you're young, you're just starting out. You don't have, you know, achievements in your past to look at and kind of say, okay, I'm all right. I've done this. This is okay. And so you always try to be somebody else. But really is if you're just yourself and you're able to just kind of sit in your own skin, that's the best way to go about it.
Totally.
All right, next question is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
I mean, I think Texas is an incredible growth story. If I was closer, I'd be doing a lot of stuff in Texas, I think. Um, right now, senior housing is exciting. And unlike multifamily, where you tend to gravitate towards red states and, Sun Belt and all that kind of stuff, senior housing is highly regulated. And so we're looking in northeastern markets. We're looking next to us in Massachusetts, New Hampshire, New York. And having, I grew up in New York and I'm in Boston now. So I'm an East Coaster and I'm excited to invest in the East Coast of the United States, Northeast, which is not something you hear a lot from
Never hear.
investors.
I ask that question to everybody. I don't think I've ever heard a Northeast state come out of someone's mouth. That's funny. All right. Next question is about finding deals. Let's take this from the perspective of condo conversions, because that's something you have direct experience with. It all starts out with getting in contact with a seller and penning that purchase agreement. So what's your favorite way to generate leads and find new deals?
My favorite way is Facebook and broker friends, so there's a lot of Facebook groups.
Interesting.
Oh yeah, there's a lot of Facebook groups that are, real estate investors, Boston, real estate investors, Massachusetts. So I'll just write, I'm a developer, I'm looking for this, we'll pay $1 million. And so wholesalers, brokers, owners, not that you get a lot of responses, but if you do that consistently, you'll get stuff. And then the other strategy is just lowball stuff on MLS, like if somebody overpriced something that needs a ton of renovations, like you want 1.2, yeah, here's 900, but we won't give you a headache. And some people realize, that's the right price for it eventually.
Yeah, especially if it's been on market for a while. I used to do that. I used to, filter by on market 90 days or more. Those people, it's been on market for a couple months. They're just getting to the point where they're like, all right, let's just get this done. And so sometimes they'll take lower offers. So definitely a good way to go about it. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, many times things go wrong, but that's when we get to learn a lesson. So what was the deal that went a little sideways for you? And then what was the lesson you pulled from it?
I tried to buy an 8-unit deal in Tampa. I was excited about Tampa too. I still am, we tried to do seller financing and they wanted to do some weird like land lease version. So we changed that to regular seller finance. It wouldn't work because of some mortgage on their side. So then we tried to get a commercial loan, and then our broker got into an argument with our lender, and it became like animosity, like on a personal level, and it ended up killing the deal. And I was grasping, like I was trying to save it left and right. It wasn't the greatest deal in the world either. I just wanted it.
Yeah.
And so the lesson is to learn to let go a little bit. Like I caused myself so much more pain trying to make something happen that wasn't meant to be, that wouldn't have moved the needle all that much anyway. Like I just spent way too much energy and worry and frustration over it. And so, along with that Eastern vibe, like just go with the flow, let go,
Yeah. It's great advice. It's easier said than done, especially when you've been chasing a deal and you really want it to get done. Sometimes you just got to let it go and move on to the next one. But if you put effort into it, it's difficult sometimes, but it's a lesson that you definitely have to learn. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
They could find me at my website. There's my name, alichoucri.com. There's also, you could find me at argandrealtycapital.com, and that's the LLC that I do the condo conversions in Boston. And then if you Google Cougar Capital, you'll also find me on that website. And if they reach out, I'm happy to talk about anything real estate or anything Eastern spirituality if they want to talk about that too.
Perfect. I love it. I'll put those links in the show notes. So if you guys want to reach out, all you got to do is click the little more in the description. It'll pull down that full description, and in there you can find Ali's link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thank you, Gabe. This was a pleasure. I appreciate you.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great day. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.